Good morning. Brian Hale here with Mortgage Advisory Partners. It's Monday, February 26th, coming to you with our weekly post on Monday morning here with our weekly newsletter. There's a link to the newsletter in this post, as well as a link to subscribe to the newsletter. I encourage you to subscribe. It's free. You can't beat the price. And if you subscribe, you would get the newsletter via email on Friday before the weekend. So you get it 3 days early if you're a subscriber. Again, subscriptions have been rolling in. We're in the thousands now that are getting it every Friday morning. So I encourage you to do that. This week's newsletter really didn't have a lot of commentary around market moving data, in that it was actually a pretty quiet week in terms of data. We heard from some of the Fed governors. Their comments tended to move the market one direction or another, whether they were kind of bearish or bullish in terms of interest rates. We got some, nominal data that came out that had a tendency to move. The good news is that rates actually finished the week somewhat lower than they began, but not materially and not in ways that are likely materially move the marketplace. The market is really focused on a couple of pieces of data that'll come out, but mostly around March 8th, which will be Friday, March 8th, will be the February jobs report, which will give us a little sense. Clearly, if the jobs report comes in as hot as it did in February, which was nearly 2 times expectation, it'll be negative for interest rates. I think most people are not forecasting that, but they weren't forecasting the 350 plus thousand jobs last month either. So March 8th is going to be a big date. I think this, as we look at the rest of the year, I read this morning that Fannie Mae has somewhat downward revised both their number of real estate transactions for 2024 over 23, and they've somewhat downward revised overall origination volume. They have sales coming in right around 5 million in 2024 as compared to a materially lower number in 23. They have origination volume coming in at 1.92 trillion for 2024. But both of those numbers are somewhat of a downward revision of their previous forecast for 24. Now, in truth, and I have a lot of friends at Fannie Mae, so I'll be a little careful saying this, their forecasts have been almost all wrong in virtually every quarter for 20 some odd quarters in a row. That to say, I think they're generally directionally correct, but you see them already revising data that they put out just a few months ago in a downward fashion. Even though the downward revisions are there, in both cases, they suggest a better market in 24 than 23. They also see interest rates being at 5.9% by the end of the year. My own 2 cents is that once the Fed begins to cut, if they begin to cut interest rates, you'll see the bond market outpace the Fed to lower rates, and I think you'll see a significant drop in 30-year fixed interest rates, likely in the second half of the year. That said, if inflation numbers, job numbers continue to come in worse than expectation in March for February data, in April for March data, then I still continue to believe, and I said this last week, the Fed still has maybe a 1 in 5 chance of one more raise in interest rates as opposed to a cut here this year to try to put the final nail in the coffin of inflation to make sure that they have cured this thing, not necessarily once and for all, but certainly in terms of this scenario and this situation that we're in now. So with that said, I again encourage you to subscribe to the newsletter. You'll get this data early so that you can use it over the weekend with clients and customers. It's, I think, particularly well written for originators, branch managers, realtors, site salespeople for home builders. It gives you some great insight. It's not written at some really high-end Wall Street vocabulary. It's written in a way that's fairly easy to understand. And in addition to that, it has some great charts that you can help to explain to your clients, customers, and or your peers what's really going on in the marketplace. So again, I wish you all a great week. I look forward to communicating with you throughout the week and again on next Monday. And I wish you all the best. Look forward to it and talk to you again soon. Thank you.